The crypto markets are entering one of the most insane seasonal periods on the calendar, the final 90 days of the year. History tells us that October and November are when markets become unhinged, but it also tells us that December can be a trap that wipes everyone out. And this year, that entire pattern is being amplified. We have Fed rate cuts acting as rocket fuel, but we also have an army of 4-year cycle believers ready to sell at a moment's notice. So in this video, I'm breaking down my exact 90-day game plan for the final 90 days of 2025. We'll cover the one thing that everyone is missing about October, and it's actually a pretty big deal, why I'm ignoring the historical warnings about December, and overall do an update on where I believe we're heading going into 2026. Okay, first off, back in July, I made a video that was really similar to this video where I talked about, my game plan for the next 90 days. And I outlined how I thought late August and September would be extremely bearish due to the TGA rebuild, and that we should expect a pretty decent correction, and then things would flip bullish starting in October. And more or less, those things have played out almost exactly to a T as I outlined in that previous video. So that brings us to October. Right now, everyone and their mom is pretty stoked out of their mind that October is going to be one of the most crazy bullish months of the year. And it does kind of seem like that because traditionally October is one of the most crazy bullish months of the year, with out of the last 13 years, only 2 of the years being in the red and every single other one being in the green. In most cases, a lot of them being like exceptionally in the green, with some of these months being like plus 60%, plus 30%, plus 47%, plus 39%, etc. And while I do generally sit in the October is going to be bullish camp, there is something that I think a lot of people missed, especially a lot of people in the macro world missed. They got kind of snuck into the quarterly refunding statement that not a lot of people caught. That gives me a little bit of cause for worry when it comes to this particular October. And that's in this little paragraph on bill issuance, where the Treasury talks about how it anticipates increases to short-dated Treasury bill auction sizes in the coming days and through the end of September, and then tacks on this one little sneaky line where they say additional increases to Treasury bill auction sizes are anticipated in October. Now, this is a line that a lot of people missed, okay? I've been talking about for ages how the DGA rebuild was gonna make August and September bearish. And that's because, as I spelled out before, that was a liquidity siphon. It pulled liquidity out of the market and it made the market fragile, okay? It's not necessarily on its own going to send prices lower. It's just making the market fragile, so it's more prone to any sort of downside action, which is why we saw such a bearish market environment over the course of the second half of August when the RRP ran low, and then into September when the RRP basically ran to zero and you had nothing to cushion it. And the TGA rebuild was scheduled to be done by the end of September, and it was completely finished. We're good. Into September, everything's looking amazing. However, as I've noted before, the TGA rebuild is about refunding or filling up the government's piggy bank account. It's like this little break in a case of emergency piggy bank, right? But month to month, the government still has to pay their bills. They still have to issue debt in order to cover their running costs. Basically, this increase or this step up in auction sizes starting in October can act as sort of a shock to the markets, creating a sort of similar fragile underlying environment for the market, although less worse than what we saw over August and September. And obviously, right now, the markets are doing fantastic. Bitcoin just hit a new all-time high, and I'm not at all saying that October is going to be bearish. I've been very, very consistently saying that October is going to be a bullish month. And as I said at the start of this video, I'm still on that train. October is going to be a bullish month. I'm just highlighting that basically this weakness exists this fragile state exists in the market, and it'll be present for about the first 2 weeks. After those first 2 weeks, that shock factor is gone and we should be good. We're in the clear. But for those first 2 weeks, if we were to have like a really negative headline event, just imagine that would be accelerated by this fragile market state, okay? So because the market isn't as strong as, people normally are used to in October, that headline event would have more impact than it traditionally does. Now, once we've cleared those first 2 weeks, and as long as we didn't have any sort of negative headline event, the second 2 weeks flip decisively bullish for October, and that's where I expect most of the action to happen. First off, we got the rate cut at the end of October, currently being priced in around 93% chance of this happening. So at this point, pretty much guaranteed, especially because we're not getting a lot of the government data because the government shutdown, pretty much guaranteed that we're going to see a rate cut in October. All right, diving into November, I expect November to be like unhinged bullish. If you look at my omni-cycle framework I've talked about in the past, it actually projects that the Altseason gate should open around late November. So that means those would be the same conditions that are present in past Altseasons will finally appear for the very first time this entire cycle in late November, at least as long as things go well. There's a chance it gets pushed into early December. I'll kind of keep updating as that goes along. But if you remember last November, it was just crazy. Like Trump won the election. Altcoins went crazy, just absolutely unhinged. Like prices were skyrocketing. So I think it's possible to repeat something similar this November, especially because it'll be like the first month where liquidity conditions like really concretely improve over like October, September and August, where things were just kind of abysmal. So we could really get a push up in November. It's also possible that people have like a short-term memory of like how good November was last year. And so they kind of pull forward the gains from November into October, sort of how like we pull forward the losses of September into August. Remember, the second half of August was horrible. And we sort of pulled forward those losses that were anticipated in September into August because remember, the markets are always forward looking. People are trying to guess what's going to come next. So if enough people believe November is going to be bullish and they try to position themselves in October, that can actually pull forward those gains into October, which would be that scenario where you see kind of a dip, maybe in the first half of November, and things don't play out that way. So I guess I'm trying to say that November is kind of a complicated month because of the recency bias from last year. And it's made even more complicated by the 4-year cycle where you have this huge group of people that believe that, the cycle's over in October or November or December or January, depending on who you're talking to. And so they're kind of just ready to sell on a dime. Like any sort of sign of weakness, they're going to be like, oh my gosh, it's the top, time to sell. Got to unload my bags. And so all this in the mix makes it like kind of a messy couple months. It's not as maybe crystal clear as what we saw over the last 3 months. So November, I don't know 100%. It's more like possibilities, kind of how I'm mapping out, like could be insanely bullish. If October is insanely bullish, then maybe November is not as bullish. And you're just going to have to watch kind of as things play out. If you feel like things get really overheated in October, you can just kind of naturally expect things to kind of cool off a little bit in November. That brings us to December, which is equally, in some ways, very, very complicated. In terms of liquidity, December is going to be the best liquidity month between October, November, and December. Plus, we'll have 2 rate cuts under our belt. We should have the Altseason gate open, which means like we have the same kind of similar environment that we had in 2013, 2017, 2021, where Altseason kind of was birthed and got started. And we'll have even a possible 3rd rate cut coming down the pipe, which should get people like just mega bullish. But on the downside, for example, if that 3rd rate cut didn't happen, say the Fed, flips hawkish, this is what happened last year in 2024, that could end up being kind of like the nail in the coffin for December. So despite all these kind of positive catalysts, you can see December actually flip decisively bearish. And it comes down to, like I mentioned, all those people who believe in the 4-year cycle ready to flip on a dime. That would kind of be their bat signal to sell. And if you actually look at the odds of a rate cut in December, right now it's currently sitting at around 81%, which is pretty high, but there's a lot of data that could come out between now and then that could completely shift this picture. I mean, that's a long ways from today. You're talking 2 months in the future. So who knows what could happen between now and then that could shift, the Fed's priorities in terms of if they're going to cut or not. If we got, some really bad jobs data, maybe that gets firmer and goes up to 90%. If we got some really hot inflation prints, maybe that gets a lot weaker and we don't see a rate cut in December. I would say a lot of the price action in December is completely defined by if we do or don't see that rate cut. Okay, so to summarize, I think October is somewhat clear in that we're more likely than not to be extremely bullish in October. November gets a little bit more murky. It depends on how insanely bullish October really is. But I lean towards it being bullish as well. December is completely dependent on if we get a rate cut or not. If we do get a rate cut, it should be bullish. If we don't get a rate cut, there's the possibility that it's an extremely bearish month with a lot of people rotating out of crypto because of their belief in the 4-year cycle. But what about beyond 2025? I actually think most of the action this cycle happens beyond 2025. I've been talking about this for a long time, and for a long time, I was the only guy talking about this. But as of recently, we've actually seen a lot of macro people start to shift their tune and start to also believe that we're going to see crypto's first 5-year cycle this time, because when looking at the macro picture, it's really difficult to come to any other conclusion that we're going to see a 5-year cycle in crypto this time because of all the insane catalysts coming down the pipeline in 2026. For example, here's a post that says, new, Raoul Pal believes Bitcoin is now following a 5-year market cycle due to an extended debt maturity period and its close correlation with the ISM manufacturing index. Using an ISM Bitcoin chart and a 5.4 sin curve, Paul predicts Bitcoin will likely peak around Q2 2026 in line with the projected ISM top. We also have people like BlackRock CEO Larry Fink saying that crypto is going to hit 15 trillion this cycle. And I hardly doubt he believes that's going to happen in the next couple months. So he as well believes that we're going to see the first 5-year cycle in crypto and that we're going to go to a peak of $15 trillion in total market cap this cycle, which is just massive for crypto. And this is really where we get down to the nuts and bolts of everything, because if you still believe we're in a 4-year cycle, you are probably planning on selling at some point in October, November, or December. But I believe it is like absurdly obvious that we're heading into the first 5-year cycle. And I believe it's that obvious because this is exactly what Trump and Scott Bessent are telling you they're going to do. And they've been saying the same thing over and over and over for a long time. They're basically following the same playbook the US used post-World War II to get themselves out of massive amounts of debt. It's the same playbook that Europe used post-World War II. It's the same playbook the US used post the Vietnam War. And it's just a tried and true playbook that countries have been using for a long time to grow themselves out of debt. Basically, here's how it works. When a country's debt is huge, it can make that debt shrink in real terms by keeping nominal GDP growing fast, strong growth and some inflation, holding interest rates low, so the government pays less to service that debt, and letting inflation quietly erode the real value of outstanding bonds. The way they do it is they lower interest rates, they have mild inflation, they make laws and change regulations so they increase demand for government debt, government bonds, and then they make sure the economy is steadily growing. This is the playbook to grow yourself out of debt, and that's exactly what Trump and Bessent are saying that they're going to do. Trump, you grow yourself out of debt. Trump calls for 300 basis points of cuts, constantly harasses the Fed to cut, posts pictures of himself firing Jerome Powell because he wants cuts, because he wants interest rates down. Scott Bessent has said multiple times, our plan is to run it hot. They want to run the economy hot. They want to run it in overdrive to grow themselves out of debt. They're making it so absurdly obvious what they want to do going into 2026. And it's made even more obvious by the fact that 2026 is a midterm year, meaning they want the economy to be doing good so that they can win the midterms. And we now have Trump saying he's considering $1,000 to $2,000 stimulus checks for all taxpayers using tariff revenue. And you can expect that to come into place in 2026 because that's when midterm elections are going to be. And one of the things I highlighted in that classic playbook is they get people to buy their debt. Like they find mechanisms or regulations or ways to get other people to continually buy their debt. That's part of the process. And as you guys know, I've been talking about the SLR changes for a long time, which is just another way to say that the government is making it so that banks can buy more US debt. You guys have heard about the Genius Act, which is a stablecoin bill. One of the reasons they prioritize that is because stablecoins are one of the biggest buyers of US debt. And this makes it so that more stablecoins can buy US debt. So the plan is simple. Going into 2026, they're going to cut rates. They're going to stimulate. They're going to run the economy hot. And the way you run this playbook is you actually want inflation to be higher than interest rates. That's the way you inflate away the debt. So in terms of Scott Bessent and Trump, they don't care if inflation is running a little bit hot and the interest rates are below that inflation rate. And in fact, that is part of the playbook on how you inflate away the debt. And obviously, like Powell and the Fed care about that, but like, come on. Like we know that Trump is going to get to appoint a new Fed chair. We know that Trump is doing everything in his power to try to like remove governors that aren't dovish and just stack the board in his favor. And I just don't understand why you would believe that he's going to fail at this, or why you believe he's not going to get his way in terms of the Fed. I just think he's going to. He's going to stack the Fed. He's going to cut rates. He's going to run the economy hot. And that's going to be insanely mega, hyper bullish for risk assets and liquidity going into 2026. And as I also highlighted, it's not just the US. Like a lot of countries are doing this. A lot of countries are in massive amounts of debt. They're all going to run the playbook. They're all going to run the playbook where they're going to run it hot to grow themselves out of debt. And this is exasperated by the fact that we have the most important race of like forever in terms of AI and robotics. The person who wins AI and robotics wins it all. They win everything. They take the cake and everything else too, okay? And so you can't slow down. You can't have a recession. You have to run it hot. You have to accelerate and you have to win this race. And so it is the most absolutely absurd thing to believe that the market's going to peak at the end of 2025. Like I would lean towards like if somebody's like, hey, it's going to go into 2027 or it's going to go into 2028, like that seems far more believable to me than it ending in 2025, given the current setup and the current situation of where things are going to go. Like I would more easily believe that than I would that we're going to peak at the end of 2025, which makes absolutely no sense. Things are going to kick into overdrive going into 2026, and I think we are just getting started. By the way, if you're interested, the Obsidian Council is my private community where I share weekly market video updates on macro, the markets, projects, etc. I share updates every time I buy and sell my entire portfolio and a ton more. I'm going to be actually opening back up the Obsidian Council tomorrow on October 7th at 11 a.m. Eastern time. If you're interested in joining, make sure to join the waitlist in the description of this video. You're going to get an email that's going to go out at that time tomorrow at 11 a.m. The first 30 people who sign up will get access. After that, I'll be closing it back down and opening it back up at some point in the future. As always, none of this is investment advice. None of this is me telling you to do anything with your money. I'm obviously not your financial advisor, and you should always do your own research. If this video was helpful, make sure to hit that like button. If you want to see more videos like this, make sure to hit that subscribe button and the little bell next to it to be notified each time I release a new video. Thanks for watching, and I'll see you next week.